Have you ever wondered what happens after your car is repossessed? Does repossession mean the debt just disappears? Unfortunately, it's not that simple. In fact, many people are surprised to learn they might still owe money even after losing their car. In today's video, we'll break down what happens when your car is repossessed, why you might still owe money afterward, and the steps you can take to handle the financial impact. Whether you're worried about repossession or dealing with its aftermath, understanding your options could save you from unnecessary stress and long-term financial trouble. Let's start with the basics. When you finance a car, your loan is a secured debt. This means the car itself acts as collateral for the loan. If you stop making payments or violate the loan terms, such as failing to maintain insurance, the lender has the right to repossess the vehicle. Repo laws vary by state, but in most cases, the lender can start the repossession process as soon as you miss a payment. However, repossession usually doesn't happen immediately. Most lenders try to contact borrowers first with phone calls or notices. Still, it's important to know that in many states, lenders can take your car without warning. Repo agents can't enter locked areas like a garage, but they can take the car from your driveway, the street, or even a public parking lot. Once your car is repossessed, it's often sold at auction. The auction proceeds are used to cover the costs of repossession, like towing and storage, and then applied to your loan balance. But here's the catch. Auction sales rarely fetch full market value. If your car is sold for less than what you owe on your loan, plus fees, you'll still be responsible for the remaining amount. This is called a deficiency balance. For example, let's say you owe $15,000 on your car loan. If the lender sells the car at auction for $10,000, you'd still owe the $5,000 difference, along with any repossession and auction costs. Even if you voluntarily surrender your car, the same rules apply. Many people end up in this situation because of underwater loans, when the car's value is less than the loan balance. This happens often due to rapid car depreciation, especially in the first few years after purchase, or because of loans with little or no down payment. These factors make it harder for the auction price to cover the loan balance, leaving you with a financial burden even after losing your car. If you're left with a deficiency balance after repossession, don't panic. There are steps you can take to ease the burden and navigate the situation effectively. One option is to negotiate directly with your lender. Many lenders are willing to work with borrowers to recover at least part of what's owed. You might be able to reach an agreement to settle for a reduced amount, or the lender could offer a manageable payment plan. If you're in a position to make a lump sum payment, this could also make the lender more likely to compromise. Remember, any agreement should be documented in writing. If you're dealing with multiple debts or need help creating a plan, working with a nonprofit credit counselor can provide clarity. These professionals can assess your financial situation, offer budgeting advice, and help you explore solutions like debt management plans. For some, bankruptcy may also be an option. If the deficiency balance is overwhelming and you're struggling with other unsecured debts, filing for Chapter 7 bankruptcy can provide release. This step can discharge debts like deficiency balances, credit card debt, and medical bills, giving you a chance to start fresh. It's also worth noting that taking action early can help you avoid repossession altogether. If you're struggling to make payments, don't wait until you're behind. Contact your lender as soon as possible. They might be able to offer solutions like loan modifications or payment deferments. Selling your car privately is another option to consider. Private sales often fetch higher prices than auctions, helping reduce your loan balance and financial impact. By understanding these options and acting proactively, you can take control of your situation and prevent it from spiraling. If this video helped clarify what happens after repossession, give it a thumbs up and subscribe to our channel for more financial tips. And be sure to check out the description for free tools and resources from Upsolve that can help you navigate debt and protect your financial future.